So you've been seeing a lot of different prop firm out there that provides you some capital if you're gonna trade for them and go through a challenge and everything. I think there's some things that people overlook, and we'll cover all of that today. So welcome back, traders, to Thailand. I'm in Bangkok right now since a few weeks. I'll be staying here because of the virus and not traveling too much, but we'll deal with it. That's fine. Today I want to share with you my thoughts about, and if you're watching this like 2 years later or 10 years later, it's gonna be weird, but coronavirus and everything around, that's what happens now. So anyway, I want to share my thoughts today about these prop firm online. So these like funded trading accounts that you can get with different firms. The basic premise is like you trade, you go through a evaluation process. They see if you're a good trader, then if you're good, you trade for them, and they give you capital based on how you rank or like more over time, let's say. And I know a lot of people like those, a lot of people apply for those, a lot of people are rejected by those also. That's just a fact of life. And I want to share with you today kind of how you should go about things. First of all, what are some things that you should not do, some biggest like mistakes from people applying to these prop firm. And then we'll talk about, is it really worth it? And what can you gain from it? What do you have to kind of lose when you apply for this prop firm and trade for them? And finally, what prop firm I would recommend if you want to decide to trade for a prop firm in the future. So first things first, here's the thing about all these prop firm online that people apply to and that you can get capital from. Over most of the people that I talk to, they all make the same mistake. And that mistake is they're trying to look for capital before it's time to do so, before their trading is solid. And that's the biggest thing ever. So think about the fact that, let's say you just begin trading now, you have only $1,000 in your account and you want to trade with that. So you think about, oh, I'll just get a prop firm and trade for them. But as you build the skills yet to be able to trade for that prop firm. If yes, perfect, do it. If no, then wait. Like, there's a series of steps you have to take before you get there. You cannot just get there and trade for the prop firm. You got to build your skill first. And the worst thing you can do is like just try it out, give it a shot because you want to get the capital, and then you get the capital, and then you lose it, and then you go back behind. That's not the way to do it. Right? You want to be able to build your skills first, and then once it makes logical sense for you to get capital, once you have like a 6 to 12 month trading record, then you're able to get capital, and that's easier. If not, you're just wasting your time, and you might as well like pay the money for the evaluation process or whatever that some prop firm have. They have a fee to be able to do the test, and then you're gonna fail. You're gonna lose your money, and that's stupid. So I see plenty of people doing that reach out to me and they say, oh, I lost the challenge at X prop firm because of that, and I wasn't ready, I had no strategies. That doesn't work. You gotta be more prepared. When you are a business and you wanna invest in something, you do things the smart way. And you should do the same thing in trading, doing it the smart way. And those people, when they do that, they're gonna have the thought, oh, like, these prop firms are evil, they want me to lose, they just collect the evaluation fee and they want people to lose the money and not get capital in the future. And that's not true. They're there because for them it makes sense to have a fee to charge people, otherwise people like lose money or they will not be serious about it. And second of all, well, they gotta make money too. They're a business, so they make money off the trading people do for them, and they make money off the evaluation fee. But I'm sure they make more money from what people train for them. That's pretty much for sure. So don't think that they're like against you or whatever. They're just there to be a business as well, and that's totally fine. And they want to have you trade for them, but you gotta be the right fit. If you're the right fit, and if you know your strategy, and if you are solid in trading, you'll be trading for them in no time. That's easy, right? And the third mistake people make comes down to not understanding the rules of the prop firm. So some prop firm, they tell you don't trade the news, or don't keep your trades over the weekend. Don't keep your trades overnight. That could happen. So you gotta be thinking about those rules. If you don't respect them, you'll be cut off quickly, and you cannot trade for them anymore. So you gotta understand all the rules that they have, and maybe talk to someone from the firm. Ask them if your style would fit their prop firm, and if not, find a different prop firm. It's no big deal. There's a ton of prop firm out there that you can find. You should not have any issue with finding one that fits your style. Okay, now we need to discuss, is this worth it? And I've got a yes and a no. So let's start with, what do you save, or kind of what do you gain by trading for one of these funded account prop firm? First things first, you are gonna be able to save, so put aside, and not have to worry about all the investors relationship. So like talking to investor, connecting with people, trying to meet investors, something you would do if you're trading for an investor that is like a private investor. So you have to meet the person The other thing is like you will have to sell your product, so you're trading to that person. You have to talk with them, witness them, sending them reports every month about what you've done, what the results are, and that can depend on like the investor for sure. But it's something you would have to do for sure to be able to maintain the relationship with them and sell them your trading, so your product, what you do. The other thing is what you're gonna save. You're gonna be able to put aside all the hassle of regulations. So register your business, register, although you could do it, but register your trading for others, like license, something of the sort, depending on where you are located. That could be something that's hard to do and a lot of trouble. But if you trade for a prop firm, you don't have to do that. That's gonna be more simple. And so that's something you can avoid, and that's gonna save you by itself a lot of time. Because just getting a license in Canada with the agency that's responsible for the financial market, so the AMF, I believe it's called in French, that's going to cost you a lot of money, and you might have to do some courses or take some class, have a diploma or something, just to get the license, okay? And I've never done it myself, but I know people that did it, and for them it was kind of a long time to get there. And the relationship could be good or bad. It depends on who the investor is, if it's a business or a private individual, and what are the requirements. Then the sales, maybe you have to meet that person like 4 or 5 times. Maybe you meet them every month. Maybe you have to meet them a few times before they give you the money. And that's also something that you gotta do with your own time. Like you cannot just skip it, okay? But by trading for a prop firm, you're actually able to skip that and go through that without spending too much time and worrying about your investors and what they do and what they think. Now, being that said, the other thing is what you're gonna lose. So trading for a prop firm that gives you a funded account and you trade from home, you lose a few things. Well, not mentioning the like human aspects, like you don't have to go out and meet people, which can feel a little bit lonely. That's one thing. But the other things that are really important is you lose the big upside. So these prop firms, they give you, let's say $10,000 to begin with, or $50,000 to begin with, and then you're gonna be able to increase over time. Okay, some of these prop firms, they go to $100,000, some they go to 1.2 million or a little bit more than that. But that's pretty much it. There's not much upside beyond that. So if you want to be able to trade like a lot of money, you're not going to do it with these prop firms, because they're usually not like really big, huge firms. They're kind of small to medium businesses. They have some money to give you. They have some partners to give you money. You're not going to trade for that prop firm like tomorrow and get a few millions, or even like tens of millions, or even hundreds of millions for sure. So if you want to have that big upside, that's going to require you to have some private investors, or at least maybe like create a fund where you can have more money. Just keep in mind that like prop firms are good to pay your daily expenses, but if you want to go to the next level, that's when the private investors or maybe other businesses will help you kind of scale up there, and that's where your upside would be, not with a small prop firm. The other thing that you lose by trading for these prop firms is negotiable terms. So they will tell you, well, like, okay, so you trade this money, you trade like $10,000 to begin with, and then we do a 50-50 split, or we do a 80-20 split. And you cannot really say, well, I want to do it different. You cannot say that. So you have to follow the terms. And those terms cannot be changed. If you want to talk to like a private investors, number one, you can set your own terms, and then you can negotiate the terms if you don't agree with them. So if the investor tell you, we'll do an 80-20, so I keep 80, you keep 20. As a trader, you keep 20% of the return. You might say, well, I don't do it that way. I want to get 50-50, or you might tell them I want to get the management fee, and that way you can negotiate and adjust the term, which you cannot do with the prop firm ever. And the other thing is, what you would lose with the prop firm is the flexibility in trading. So, like we said before, they have these like rules of you cannot trade the news, you cannot trade on the weekend, you cannot keep trades on the weekend or X and X and that. And these are not things you can say, well, I want to do it different. You gotta follow the rules, because the rules are there for a reason. So if you were to have your private investors and you trade for them, you set your own rules. You tell them what you want to do, and they will accept it. And there's no big like thing to overcome there. So that's easy. So it comes down to what you prefer, and also where you are in your journey. I would never recommend like a beginning trader who's having some momentum, like a 6 to 12 month track record, to trade for a private investor, unless they're able to do it. But you might be better starting out with a prop firm and later going on to private investors and bigger funds to manage money. And then you're able to have more flexibility, more returns, and bigger upside. Okay? So in case you're wondering what kind of platform you can go with, there's a ton of them, and I won't, like, the goal is not to do a list of like all of them because there's 1,000 that I don't know probably, but I want to share with you those that my student have used in the past. I've not used platform myself. I have different goals, and I would much rather trade for private investors other than platforms. But here are some that my students use and they're satisfied with. So first one is FTMO. Here I have a video with them, or I talk with the founder, Qatar. They're really good. They have some rules that you might have to follow, but they're still like pretty flexible. And you gotta, of course, talk with them and see which one's gonna be the best fit for you. The other one is the 5%ers. So they have less rules, which might be better. They have a different process to get funded and evaluated with them. The other one is Top Step Trader, which are more restrictive. Like, they don't allow you to trade news and this and that, so they have more rules. They could be good because they offer different markets. 5%ers and FTMO are mostly for Forex, but Top Step are for a lot of different markets. And then AxiSelect is the one that I would favor myself because of the easy funding. So they give you a score based on your account metrics, and if you get a score above 65, you get funded by them. The only issue is that the profit split is quite bad. So you get 20% of the return, and they keep 80%. These other platforms might give you around like 50-50 or something of the sort. So, but these other platforms also have a fee that you have to pay upfront, and AxiSelect doesn't have any fee. So it comes down to what you prefer. Hope that makes sense. I hope that was useful for you guys. I'll leave the link below for all these platforms with some discounts if you guys want to check it out. And let me know your thoughts as always in the comment section. Here are a few comments from the past video. I appreciate the comment as always. And I'll catch you back here in the next video pretty soon. Ciao.